Well, hello everyone. Welcome to Getting Started with Technical Analysis. Today, my friends, we are talking about support and resistance. I first got introduced to technical analysis back in July of 2011. So it's been a hot minute, but I'm telling you, it totally blew my hair back when I saw charts and saw the power of using support and resistance as guidelines, to help me make more informed trading and investing decisions. So that's what we're going to talk about today. We're going to look at a bunch of charts. We're going to start by looking at some concepts, and then we're going to place a couple of example trades based on what we see on the charts. And we use kind of a combination of stock trades as we go along and then option trades because our group is kind of split. Some like to look just at stocks and some at options. So, we try and keep both groups happy. My name is Barbara Armstrong. I'm a coach with Schwab. I've got Mr. Ben Watson with us in the chat today. He knows a ton about all of these concepts. In fact, he teaches a live event and just did one in Denver last weekend where the first day is an introduction to technical analysis and the second day is an intro to options. So if you have never been to a live event, you may want to check them out. I'll show you a little later in our program today how you can find information on the next one. So I got introduced to this world of trading through a live event. I continue to be a huge fan as a coach, getting to come out, and meet many of you in person, and we get to have conversations. And, next time I'm going to ask that you write your handles on the bottom of your badge. I got to meet Riceburg in Dallas and Sharon, and they're wonderful events. Okay, so along with our regular programming, if you are not following Ben and I in the land of X, you're going to want to do that. Ben's handle at Ben Watson CS. He's posting a lot of fantastic content. I'm posting some news that I think you'll find helpful and useful also on that medium. It's another way for Ben and I to be able to communicate with all of you and you with us outside of webcasts like this. My handle at Barb Armstrong CS. And just before we get into the thick of things today, know that all of the examples we look at are for illustrative purposes only, none of it to be construed as a recommendation on the part of Schwab or myself. We use the Paper Money software application on the Thinkorswim desktop platform. It is a brilliant place to learn and to hone your trading skills. Make sure you understand your plan and what you're doing before you consider trading in a live account. One of the nuances or differences is that short options will never be assigned early in Paper Money. That can happen in a live account. So, I've designed this to be taught in about a 9-week series. And usually throughout the 9 weeks, we'll add a couple of kind of bonus lessons. We did one on Fibonacci's in the last series and another one on diagonal resistance breakouts, but this is kind of our basic format. We're now on week 3. Last week, we talked about trends and moving averages. If you missed that, I will put a link in at the end of this webcast, and there will be one in the show notes also. And then next week, we're going to talk about candlesticks. So, be there, be square. So we're going to go over some of the basics of support and resistance, look at ways to identify that, discuss trend lines, and then look at some charts and place an example trade. So when we look at support, I think of support as a floor. I'm not thinking Spanx here. I'm thinking office buildings and ceilings and floors. So, it's an area where investors might come in and buy to prevent the price from falling further. And, it is not an uncommon thing on the charts. And this is part of what I find fascinating about technical analysis. And these aren't necessarily specific. Let me just move this to another screen. Oh, can you tell I've been posting things on X? That was part of an X post. So let me come in here. So we see something come down to a support level. And you can see that there's a line here, but also some shading around it, because support and resistance, it's not a finite number. But then we see something, it came down and kind of hit this support area once, and then came and hit it again and again and again. And then, 4 days in a row. And then it rallied, came down, spent another 3 days there. And then it took off. And when things started to get ugly and it fell, where did it come down to? Pretty close to this support level, or this range of support again. So this is a place often where buyers will step in and say, okay, at this price, it looks attractive. And often people will look at something and they'll say, hey, this has now hit this support line like 10 times. And so the more times something hits a support level, they see the more times it hits the support, the stronger they see it as being. And I talk about, my father-in-law, who was a huge fan of medieval history. And if I could, draw, which I cannot draw my way out of a paper bag, I'd have a line of knights here. And every time it comes and hits this again, more reinforcements are brought in to strengthen this wall. And, sometimes when we're placing trades, we want to have as many knights in that line as we can, or as many levels of support. If we can place our trade below 1 level of support, that's great. If we can go below 2, we might even be happier. Okay. So that's that one. So support, think floor. Resistance, think ceiling. So this is an area when it gets up to a certain height that the buyers might say, hey, I bought this down here. It's up near a previous ceiling. I have a feeling it may not make it past Barb's row of knights. And so I'm going to sell. I'm going to take the money and run, cue the Steve Miller Band. And so, this is not an uncommon thing to happen either. Sorry, let me just get my drawing tool teed up again. So here, we had it come up and then spent a couple of days here again and again. And then it came down and then came up and hit it again and again. So this is a range where, people start saying, what, might be time to sell. And every time it gets here, and kind of the more often you see people run into this ceiling and roll over, then the more you expect that. And it kind of keeps the price movement from going any higher. And again, like we pointed out, with the last one, it's a general area. It's not a specific price. So if you're saying, well, I put my target in to get out at $60 and it only went up to $59.80. So this support and resistance stuff doesn't work. Well, yeah, it's working just fine. And again, the more times that it's hit that ceiling, or that resistance level, the stronger it is, implied to be. Now, if you're looking at this, for those of you who've, been at this for a hot minute, do you see another pattern on this chart? If we're kind of playing I Spy with my little eye, because I sure do. And this is part of, support and resistance. So we might say, well, we have a support level down here, resistance level up here, and this pattern that it's created in between is an inverted head and shoulders. Yeah, you guys, Kevin and Priya, you've got it. Yeah, and so how a technician, when this breaks out, or if this breaks out, because it might not, but let's say it broke out and then came back to retest and then started to take off, a technician might measure this distance and say, okay, if the distance from the top to the bottom of this pattern is $50, and let's just make the math easy for me, and our resistance level is at around 100, when it breaks out, I might expect it to go up by about $50. And that's one of the ways we can determine a target. We can also use things like Fibonacci's, and we discussed that in a previous webcast, and we'll bring that up again. But support or a floor, resistance or a ceiling. And is it always sideways? Yeah, no, it can happen. Support and resistance can happen on angles, also, and we're going to look at some of those as well. So let me shake my Etch-a-Sketch here. And one of the things, and I find this a fascinating thing about support and resistance and about technical analysis in general, is how often things will come down and practically kiss a previous level. And so, we had a situation here where this was acting as a floor, and it went for weeks, like bang, 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 bang on the floor. If you were on the level below, you might be knocking on the ceiling saying, hey, cut it out. Yeah. Julia is asking if I draw on charts regularly in my own training, trading. Absolutely. I'm always drawing lines on charts. Yeah. So for me, the answer is yes. Now, I know there are some traders that grew up looking at just the analytics, and they might not even look at a chart. Like, Ben and I were talking, and like, we wouldn't place a trade without looking at a chart. It's a whole different thing. Yeah. So, but yes, I do. So here's our floor, or, support, to use the trader speak for it. And then it's trading in a range. And we've seen this happen often. Think Dollar Tree, and we're going to go look at some charts. So think Dollar Tree or Boeing. Mickey D's has recently been traveling sideways, Travelers. And, and then this one broke to the downside, this example. And then it looks like, we're not finished here, but looks like, even though it gapped up, maybe that was on an earnings, it looks like maybe it's setting up here, not a double bottom, maybe even a triple bottom. We don't know how the story ends because we're just seeing a snippet. But the point here is that our support level ends up acting like a ceiling or resistance. So all of a sudden, this support becomes a barrier and becomes a ceiling or a resistance level. And so if we're looking for this downtrend to end, we'd be looking for it to break above and then maybe come back and retest. And sometimes things will come back and retest, and sometimes they don't. But I love this idea of, the floor and a ceiling in a multi-story building. Where old ceiling can become new floor and vice versa. So old resistance can become new support, and old support can become new resistance, which is what we're seeing in this example here. And we're going to go and look at some examples of this on the charts also. And then trend lines, so we can see trend lines, and they in and of themselves can become diagonal support levels and, diagonal resistance levels. And, it's, I've been saying kind of tongue in cheek. So a trend line can be an area of support and resistance. So if we have, or a moving average can act as a support or a resistance level. And what you want to do is either connect the lows or connect the highs. And, I've been joking because, the S&P and the NASDAQ were kind of going like this. And then we hit February 19th, and then it started to go like this. And then, and so if we drew our line here, and it could be just a trend line or a moving average, and now things are starting to break out. And so we would call this a diagonal resistance breakout. And I said, it's what all the cool kids are doing right now. Like every once in a while, like you see, a lot of stocks in the market behaving similarly. And so, for a while, all I was seeing everywhere I looked was, cup and handle patterns or, inverted head and shoulders. And right now, the charts are littered, shall we say, with diagonal resistance breakouts. I jokingly say it's what all the cool kids are doing, but it's not what all the kids are doing. But we're seeing this is a common type of pattern that we're seeing right now. And for a trend line, they're saying for support and resistance, technically you need only 2 points of contact. For a trend line, you want at least 3. And that's, as my son, who questioned everything, would say, is that a rule or a guideline? Okay. So, channels and sometimes like what I'll do is I'll draw a support line and then I'll notice that the ceiling or the top of that tends to be a similar distance away. And so I'll right click on that line and duplicate it and draw another line. And I've done that with stocks like NVIDIA, for example, JP Morgan, Rivian, so they've been trading kind of in channels, some upward trending, some like NVIDIA, downward trending. And then what we're looking for when we see something in a channel where the support line and the resistance line are kind of running parallel is for it to break either to the upside or to the downside. So if it's breaking above a diagonal resistance line, that could be bullish. If it's breaking below, as in this example, that can be bearish. So it could be the start of another channel also when it breaks a level. Maybe it's now going to start, continuing to move in the same direction just from a lower point of view. So that's something to look at. The other thing we might want to look at is gaps. And so sometimes when something gaps up, and we often see this on earnings, right? This is a pretty common time for us to see gaps. So we had here kind of a double bottom and then it gapped up and then it came back to retest where it the start of where it started the gap from. And this is not an uncommon thing for us to see. And then sometimes something will gap up and then it just keeps on clipping. And so, if you're saying, well, it gapped up, and I remember doing this, getting started with technical analysis, and often, I was told that, it's not uncommon for a stock to come back to the top of that gap level, and that while that may be correct, I can also show you an example recently where something gapped up on the open and that it never looked back, baby. It just kept on trucking. So it gapped up and then it just went like this, straight up. Yeah, and you're going, hey, I was waiting for it to come back. I thought it was supposed to come back. Well, things don't always go the way we want, do they? So if you put in an order and said, hey, I want to buy this when it comes back, well, your order never got filled. Yeah. Sorry, your order didn't get filled. And the larger the gap, the more significant it may be seen as being, it's, and then sometimes, it'll gap up and it'll come back down to this level, the point from which it gapped up. We just don't know. I mean, there are no guarantees. But this type of pattern that you're seeing on the chart, it's not uncommon to see that. So let's get out and start looking at some charts. And so, we could even start with the S&P, right? And let me just clear these. So we had this pretty significant uptrend where, we were just kind of clicking along and climbing along. And then that, we hit this high back on February 19th, and then things started going south. And then when people may have really started getting nervous was when it broke this diagonal support line. So it broke that diagonal support line and then it kept on falling. And then, as we went along, people may have drawn a diagonal resistance line. So this was started acting as a ceiling. And here's our 1, 2, 3, 4 points. And now it's broken out. And so, this would be considered, this was a bearish trend. I mean, at one point it was down over 20%, but it's come back up, broken above that diagonal resistance line, kind of hung out here for a few days and then moved to the upside. And now we're seeing a pullback. Some might say, well, that looks like a classic, because this is, after all, technical analysis, a classic, potential bull flag, right? Could be. But, with a bull flag, we also want to see a close above the high of the low day. And today is so far setting up to be the low day, not a close above the high of the low day. So if we're trying to be conservative, we would wait for this bull flag until we see a close above today's high. Now, what some people might find encouraging, I'm throwing stuff out for the bulls here, even though it's a bearish candle today. Now, it's bearish in what way? It's bearish in that today's candle, it gapped down on the open from yesterday's close, right? Right. So that's bearish. But it opened lower, and so far, and this is still a live candle, it appears to be trying, like buyers have come in and they're trying to bring they're trying to bring it up. But what also some might look at as, okay, it pulled back now 2 days. This is kind of a doji type of candle, which coming up to the 10-day moving average might be a sign that this pullback is complete. Now, we've got big news coming in the market, so there could be, the Fed has started their meetings today. They'll be speaking tomorrow. So it could be, just people are hesitating. And we could see hesitation again in the market tomorrow morning. So we'll just have to see, because news events can influence the market, and they've had tremendous influence and caused a lot of volatility in the market so far this year, haven't they? They have. Okay. So let's look at some of these charts. So Dollar Tree. Now, we've talked about Dollar Tree in some of my other classes. We've traded it a lot as it went sideways over the last 6 months. But, here's an example where, we had a stock that was downtrending, had a gap down. Let me just clear this. So, it hit a support level and then it rallied, and then it hit a resistance level, what became. So this was the first touch. Then it came down again, and it didn't just hit it once. It was like once, twice, 3, 4, 5 times. And then it tried to rally, came back and hit it again, and then came up and hit the ceiling or resistance level. And when it hit the ceiling this next time, it didn't just hit it. It's like it was pounding on the ceiling for a week or more, and then it came down just slightly and then came back to this range and hung out there for another, couple of weeks, like a month. It was banging on the ceiling. And then it came all the way back down to the floor again, and up again to the ceiling, and down again to the floor. And then it finally broke out. Now, would you say oh, I didn't get it on this day, so I'm not going to place a trade? Well, the first time it breaks the ice, it could be a fake out. It could be a breakout, could be a fake out. So some might say, I'm going to wait for it to go up and then come back and see if this old ceiling or resistance level starts acting as new support. And in this case, check, it did. And so, might we want to add Dollar Tree to our portfolio? And when we think about it in the context of what's going on in the world, well, they sell a lot of cheap stuff that may be coming from China. Well, with the tariffs, might that not cause either them to have to increase their prices, or it's going to have a negative impact on their profitability? On the other hand, could demand go up because more people are trying to budget if their wallets are a little tighter, and maybe they're shopping at Dollar Tree for things that they wouldn't normally shop for, canned goods, items and stuff like that. because, things seem to be going not too badly for this stock after a pretty long period of, going sideways. Okay. Okay. So, but that's an example of, old resistance becoming new support and of something trading in a range. Now, if we look at Boeing, Boeing, what do we say about Boeing? Like, holy smokes, Batman. Like, this is a stock that's had so much news hit it. China canceled a number of planes. They had, a door fly off a plane last year. They've been, on the struggle bus. We can see the long-term moving average here has been downtrending, but, since July of last year, they've been in this range where they've come down and hit this support level a couple of times, and then they've come up and hit this ceiling or this range a few times, and they're right back here again. So support and resistance, ceiling and floor. Yeah. Let's look at McDonald's. And, this has been like uptrending, and then it had a bit of a fall and uptrending again and trading in a bit of a range. Just came with earnings. Some people are concerned about, people going out to eat less, about their ingredient costs going up, and that's going to, hit their bottom line, their profitability. So I looked at the news on this stock today, and somebody had said, they were adjusting their price target. Some are moving it up. So we've got 3 here that are moving it up. Daywa moved it up by $2 on a $300 stock. So, the analysts tend to be moving it up, but there is a concern with, with profitability and with price of ingredients going up with tariffs. And so might this continue to stay in a sideways range? And can we trade something in a sideways range? Sure, we can. We can do something that I like to think of as a credit spread sandwich. It's technically called an iron condor. And an iron condor is where you're assuming, or your best analysis is something is going to stay trading in a sideways range. And so you sell a short put vertical at the bottom and a long call vertical, a short call vertical at the top. Now, if you own the stock, if you don't want to trade options, could you do something different? Well, when it comes, if it came back down to here and bounced, you could buy the stock here and put in a target to sell it here. So that's another way that, one might consider trading something that's in a sideways range. This is, the blue is a 10-day moving average. So you can see it's the one that kind of is the most squiggly because it's the most responsive, because it's the shortest time frame. The red is a 30-day and the black is a 100-day. How about Travelers? So Travelers, again, it's not been in a range quite as long, but we saw it come up and hit this ceiling once, twice, 3, 4, 5, 6 times in a row. And now it's come up and it looks like it's breaking out after coming down and hitting this bottom a few days. I think this is one that I posted on Twitter today. You've got about a 34 point range here. And this one also just came with earnings. So you can go back and have a look at it. Beat on earnings. The estimate on the street was 68 cents and it came in at $1.91. So it didn't just squeak by, like it blew their earnings call, out of the water, which is why we've probably seen this kind of move since. But if you don't have insurance stocks in your portfolio and you're saying, well, I've noticed that financial stocks have been doing well, might we consider this a breakout, and could we, either just add it to the portfolio or, place a target on it based on the width of this channel. Uber. So do you see a similarity in this chart here? We had this support level where it came down and hung out there for a couple of weeks, and then it came down and just like it was a kiss and go. And then, at the resistance level or ceiling level, it came up here once and then spent 3 or 4 days here. And this time, like it came up and it paused for a day. And this one, we've got earnings on this tomorrow before the market opens. And I think I posted this chart on X also and said like, hey, will it send it up, into the stratosphere, or will it send it back into this range it's been trading in for the last 6 months or so? And we could see this as a double bottom breakout, but with earnings, less than 24 hours a day, you may just, want to hold your horses. Okay, so that was Uber. How about old floor, new ceiling? Triple M. So, this is kind of an interesting company. They hold so many patents, right? But it was kind of going sideways here. So, we could add our ceiling if we wanted here. But really the relevant thing right now is the floor, because all of a sudden it broke down below. So it broke this support level, and it had spent like 3 or 4 days here, a couple of days here, a couple of days here. Like it had hit the support level multiple times, and then all of a sudden, kaboom, it broke below. And here's a case where now this area of support is now acting as a new resistance level, isn't it? So here was our support, these ranges, and now all of a sudden, ceiling. And this is not uncommon. Not uncommon at all. And so if you trade options, could you do something like a short call vertical here? Yes. Could you do a long put vertical? Yep. Could you do, just flat out long put? Yeah. We could do any of those things. And so let's do that as an example. Here's something that came up and is bouncing down off a ceiling. And if we're looking for a bearish entry, we had this candle, this kind of doji candle at a resistance level, at a ceiling. And we're looking for confirmation for it to be trading below the body of this candle, which it is. And so could we come to our trade tab? We're on the other side of earnings and we could come out to June. And, does it trade more than 1 million shares a day? Yes, 1.4 million. Do we have lots of volume on open interest? We do. And if we take this trade at the 140, is there a tight bid-ask spread? Well, we'd want it to be less than 50 or 60 cents, and it's 20. So we're good there. And so we're going to buy the 140 and we're going to sell the 135. And our goal is for it to go below $135 and then stay there. And in my trading a smaller account, what we've typically done is put in a goal of, if we're up 50% on the trade, then we want to exit. And yesterday we decided, hey, if we could make 25% and be in it for, just a short period of time, might that be appealing? And so, if we wanted to do this at 50%, we'd take our 218 and we'd multiply that by 1.5. Say we want to get out when this is worth 327. Now, if we said, you know what, that's, I think, being a little greedy. But I mean, ultimately what we could make over 100% because we're risking $218 to make 282. But if we're saying, you know what, if I buy a call, my gains are technically unlimited, but I'm not going to stay in it forever. If I wanted to be more modest, I could say I'm going to take 218 times 1.25. And when it gets to 272, I'd like to exit. So I'm going to come down to first trigger sequence. And well, at the beginning, it says single order. I'm going to make it a first trigger sequence, right click, create an opposite order, and we're going to put in an exit at 272. Now, this is a $500,000 account. If we can risk, $2,500, we could do quite a few of these. If we did 4 of them, that would be risking. So we could do 10 and still be under our $2,500 limit, because that would be 2,180 we'd be risking, and we could lose all of it. But we're going to track it, and if we get out and we make our gain, we're up 25%. If it comes down and we're in a position where we're losing 25%, we would go in and manually exit the trade. So our max loss here, 2,180. The most we can make, 2,820. But we're saying, hey, if we can just make a 25% gain, we're going to be happy campers. So we're going to put that in our long put vertical group, fire in the hall. Yeah. Yeah, Mike, that's just in my petty cash account. Yeah. Yeah, so one of the nice things about paper money, you can easily add money, whenever you like. Okay, so let's go, look at something else. And so if you wanted to put that on your chart, you could just draw a line here and say, we did a long put vertical and our strikes were at 140 and 135. And then we're going to put our line at 135 so that we know this is where we want this trade to go. And I'm going to make that show up on the right. So that's our goal, is for it to fall below that. Okay. Okie dokie. So moving right along, diagonal. Let's look at, when I said, what all the cool kids are doing. Let's come and look at some of those. So how about American Express in the financial space? And we talked about this yesterday, I think, in our trading a smaller account. So, it was just moseying along and, going up tickety-boo, just, walking up the hill until we got to this, end of January, beginning of February, and then it started to fall. And all of a sudden, when we start honing in on this, it looks like this 30-day moving average, which had been kind of acting as a support level, all of a sudden it starts acting more like a ceiling, right? And when I drew this diagonal resistance line, and it came up and it didn't just hit that line once, did it? It kept bonking its head on that. It hit it there and there and there and there, came up kind of within striking distance here and here. And then we had earnings, and then it finally broke above, and it crossed the river, and it did come back and retest the ice, and now it's moving up again. And so if you were bullish on American Express, and you may want to come over and check the news, because technical analysis isn't all we're looking at, right? Could we do kind of flip it and reverse it instead of doing a long put vertical on like we did on Triple M? Could we do a long call vertical, which is a bullish trade? And today we're down 0.5%, but you'll notice it gapped up on Friday, moved up a bit on Monday, kind of consolidating. So could it pull back? It could. Or could it just continue marching to the upside? So if we give it a bit of time and we were to come out to June, we say, we're going to be modestly bullish here. This trades over 1 million shares a day, $16 to $16.35. We've got lots of contracts. Now, if we go to the monthlies, the one thing here is we have to do $10 wide. So it has to go up by, $3.70. So it's bullish, and yet our break even is below the current price. And how much could we lose? $593. So if we could risk, $2,500, we could do 4 of those. In our trading a smaller account, we couldn't even do 1 if we're not willing to risk more than $500, because we could lose all of that. And so if we wanted to position size, there we go. Single order, we're going to make that a first trigger sequence. And then we're going to go for that 25% gain. So 590 times 1.25. If it gets to 737, we're out. So we're going to right click, opposite order. And like what if it's up 23% and it looks like it's going to pull back? Can we exit? Well, sure. Let's make it 740. Good till canceled. And we're going to put that in our long call vertical group. Now we just have a couple of minutes left. And I did say for those that like stocks, we'd look at a stock example. So let's go back to our charts. And could we, have bought the stock on American Express? Sure, we could have. And let's look at, CRM. Is that doing the same thing? Yes, it is. Had a great fall and then crossed the river, pulled back, crossed, pulled back, moving to the upside again. And so, we do have earnings coming at the end of the month, but could we buy some shares of Salesforce? We can have, we could buy 100 shares of this stock. And to protect ourselves, like in this case, we might just say, okay, it looks like here's a recent support level kind of right around here. If we're trying to determine a stop, say, I'm a little nervous. I don't want to wait and have this, wait until this is really downtrending. If in fact, I'm not correct about this breakout, if it doesn't continue, if it starts to fall, if it goes below 263.15, say by 3%, that would put us at 255.25. I'd like to exit the position. And so we're going to come to our trade tab. We're going to right click, look at buying custom with a stop. We're going to buy 100 shares, but we're going to define our risk and say, hey, if this goes below 255, we want to exit. And so that's risking about $18 a share. That would be about $1,800. And there's no guarantee with a stop that you're going to get out at exactly that price, because stocks can gap both up and down. And so we're going to put that in our growth stock group. And that's based on a diagonal resistance breakout. Now, that's our class. Can you believe it? It's gone fast, hasn't it? So here's my ask as we wrap things up. So I think we've done what we set out to do today. Now I get to be bossy with you and say, here's my ask of you. One, if you're not following Ben and I in the land of Twitter, please follow us. Ben Watson CS, Barb Armstrong CS. I believe that there's a survey today also. And with that survey, there are 2 questions, and it's super easy to fill out. Takes you about 10 seconds. 1, I hated it. I'm never coming back. 10, I loved it, and I'm going to keep showing up every week, and everything in between. And then you can put comments in. So if there are topics that I didn't talk about in the last series that you'd like me to address, please let me know. My commitment to you is if you fill it out, I'll read each and every comment, and so will our management team. Hit the like button. Hit the subscribe button. If you're looking for some trading plans, if you go to the Trade Management Mini Session playlist, there's a bunch of them in blue, including one for the long call vertical we did today, and one for the long put vertical. Yeah, and that's a wrap. So I hope you had a really interesting time, that you found this informative. Up next is, help me out. Let me just check. I think it is it used to be trading flag patterns on Tuesdays. It is swing trading with Mike Fairborn. So if you'd like to join us for that. And then Ben Watson is filling in for Connie Hill, who is still romping about Spain or she's all over the world. He'll be filling in and teaching selecting an option strategy. I hope you can join us for that. Take care, everyone. Have a great day, and we'll see you in a webcast coming up soon.